Hi there everyone, this is FS Coach, your mentor. Guys, welcome back again to yet another exciting part of this FS Coach 3.0 course. So without wasting time guys, let us first get to know our mentor a bit. As you can see over here, we have Taylor Pasha, formerly known as Taylor the Goat on Instagram. So basically Taylor is a qualified personal trainer. I've been trading for 1.5 years now. Basically I deal with psychology and I'm a mentor at FS Code. And basically in this lesson guys, I'll be teaching you guys how to trade using trends, support and resistance levels and key chart levels. So without wasting time guys, let's get right onto it, man. So as you can see over here, we have Forex trends. Firstly, what are Forex trends? A Forex trend indicates the rise or fall of a currency's value based on supply and demand. A currency's price is in an upward trend when there is a high demand for currency or a shortage in its supply. Contrarily, a downward trend in the price of a currency is caused by low demand for or an excess supply of the particular currency. So basically guys, after reading the definition, what can we conclude with this? We can basically say that a trend occurs when the price of an asset is moving in a particular direction. It can be higher or lower over a given period of time. We can also express this differently by saying the formation of a trend takes place when the price of a security or an asset indicates either an uptrend pattern of higher highs and higher lows, or a downtrend sequence comprising of lower lows and lower highs. So don't worry guys about this. Basically later on in the lesson I will be showing you guys all of these, what we mean by an uptrend, what we mean by downtrend. Basically you're gonna get to know the different types of trends that we have that you guys will be using. You guys will see that this will be the most used strategy. Basically a lot of traders, even for beginners as well, this strategy is quite simple, it is quite easy. Only thing that you do guys is just follow the trend. As long as you know what an uptrend is, what a downtrend is, and what a sideways trend is, and basically how to trade it as well. Don't worry about that guys, do stay tuned. All of that will be you're gonna learn about all of that in this lesson coming right up. So let's continue with the slide guys. Trends play an extremely important role in technical analysis, which can be defined as the study of historical price data used in order to identify price patterns and to predict future price movements in the market. So basically guys, what does trend trading mean? Trend trading is a strategy that involves traders analyzing the direction of trends for financial instruments. When an asset is seeing an uptrend, traders would often look to enter into a long position and buy. Basically, when we say that traders would look to enter a long position, it means that they will be looking for buys. And then vice versa, if they enter a short-term position, they're looking for sells. So basically our long position, it represents buys, and then our short position, it represents sells. But that topic will be covered in another section of the course. Do stay tuned for that guys. However, let's continue with the slide. In the opposite scenario, when trend direction is downward, traders would go short and sell. Basically, just as I explained, short position is for selling guys. So what are the different types of trends we have? We have an uptrend. Firstly, an uptrend is basically bullish trend, looking for bullish momentum. Basically the market is moving upwards. It is basically going upwards, hence it is an uptrend. And then we have what we call a downtrend as well. Opposite to an uptrend, downtrend, basically these are your bearish movements. The market is basically going down in simple terms. And then we have the ranging market over here. Basically ranging market is when the market is consolidating meaning that it is buying and selling. Basically it is trapped in one channel, which we call it a consolidation channel. So basically in scenarios like these, you'd wait for the market to either break the high or to break the low. So basically if it breaks the high, be looking for buys. If it breaks the low, we're looking for sells. But then a ranging market is a consolidation channel. Basically, the market is just ranging. It's moving up and down, up and down. There's no solid trend. So basically, there's no uptrend or downtrend. The market is just consolidating. So let's continue with the slides, guys. Trend traders create strategies that are developed based on analyzing the trends of an asset. A trend following strategy is based on expectation that the direction of price will continue in its current form and the trend will not reverse. This means that if you are trading an uptrend, you could continue to hold your long position and watch the asset increase in value, while you could choose to sell your asset if the trend is going downward. Basically, is what I said in the beginning, guys. In an uptrend, you'll be looking for your buys because the market is moving. It's in a bullish momentum. Basically, it is buying. It is going upwards. Always follow the trend, guys. Remember, we do not trade against the market. We also do not control the market, but what we do is we follow the market, and also we use past data to predict future movements. Alright, guys, stay tuned for that. That will also be explained later on in the course. Continuing with the slides. Trend following examples. Basically, below we have an example of an uptrend, which is when the price rises in value. Traders following the trend pattern would attempt to gain from the movement by entering a long position as the price level increases. When the trend is making higher highs and higher lows, then it is showing an uptrend. Basically, let me show you guys what we mean by this. Okay, guys, so basically I'm gonna show you what we mean by an uptrend. Basically, guys, what we mean by an uptrend is this is what we mean by an uptrend, guys. Market is gonna push down, push up, push down, push up, push down, push up, push down, push up. Basically, this is how we define an uptrend, guys. Basically, the market is moving in an upwards trend, as you can see over here. Let me just put this trend for you guys. Basically, the market will be moving in an uptrend like so. Basically, this is our higher high, higher low, higher high, higher low, higher high, higher low. Basically, this high is higher than previous higher high, hence it's a higher high, higher low, it's higher than the previous higher low, and so forth, guys. And then let's carry on with the slide. Alright, guys, so you get it, man. Just continuing with the slides then. Basically, I've just showed you what we mean by when the trend is making higher highs and higher lows, then it is showing an uptrend. On to the next slide, guys. The chart below shows a downtrend, which is when the price is decreasing in value. Traders could then go short and take a sell position as the trend is making lower lows and lower highs. Let me show you what I mean by this, guys. Alright, guys, so basically this is what we mean by a downtrend. Basically we're gonna have an impulse move, correction, impulse move, correction, impulse move, correction, impulse move, correction, and an impulse move to the downside. So this would be our downtrend, basically, guys. And just to give this a twin brother, a twin sister, I'm gonna put it like so. So basically what we mean by higher highs and higher lows, lower lows and lower highs. This would be our lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. You get it, guys. Same thing with the it's just vice versa to and our downtrend. So yeah, guys, let's just take it back to the slides and back again, guys. So continuing with the slides, guys, I just showed you what we mean by the market will be making lower lows and lower highs. On to the next slide, guys. So basically a sideways trend is when the price action is neither reaching lower or higher points. Generally, traders do not seek to make any gains with this type of trend unless they are analyzing extremely short-term price movements, such as in a scalping strategy. So basically, guys, in a consolidation channel, you wouldn't be looking for long-term movements, as we are basically consolidating. The market is giving us short-term buys, short-term sells, short-term buys, short-term sells. So basically, if you'd want to take a trade, you'd be looking to apply a scalping strategy on this one. Basically, scalping strategy is quite easy. You look for quick entry, quick in, quick out. Easy as that. Quick in, quick out. That's it. That is scalping, basically defined in simple terms. So carrying on with the slides, guys. Short-term trend trading. Short-term traders such as day traders like to keep their eye on trends that arise throughout the day in short periods in order to try and benefit from short-term price fluctuations. There are a variety of popular strategies that intraday traders like to use, such as scalping, and there are also separate intraday trend following strategies. Basically, intraday trend trading, intraday trend traders would usually hold positions until the end of each day. Therefore, day traders can analyze trends that are only active for a short time period within the day, even for a few minutes or hours. Intraday trend following consists of analyzing the shorter term fluctuations and movements in price. So, for example, if there is an uptrend during the day that consists of a series of movements creating higher relative highs and lows, then traders could place a trailing stop before the low and then at the next higher low in the trend in case the trend were to suddenly reverse. So when following a downtrend, intraday trend following could be beneficial as this involves a short selling strategy which is often used by short-term traders. Right, guys? Long-term trend trading. Long-term trend trading involves holding onto a position for longer periods of time, often that is in an uptrend. This could be a few weeks, months, or even years. Long-term traders make decisions based on in-depth fundamental analysis that predominantly focuses on how the market will look in the future. When it comes to trend analysis, long-term traders are less concerned with the daily trend fluctuations and concentrate more on the longer-term trend and its influential factors. Basically, position trading is one of the most popular trading strategies among long-term traders is position trading actually. This trading method enables trend traders to buy and hold a position for extended periods of time. Without concerning themselves with shorter-term trend movements, the focus is on a long-term objective. However, if short-term fluctuations potentially influence the long-term outlook of their position, then trend following is important and plays a significant role in attempting to attain long-term gains. In order to evaluate potential price trends on the market, it is common for position traders to focus more on fundamental analysis. So just in a nutshell, guys, long-term trading that involves your swing traders, your positional traders actually. Swing traders are basically traders who are looking to hold trades for more than a week or so. Same thing with positional trading. Positional trading is people who are even worse, who are looking to hold trades for more than a month. I remember, guys, I actually held VIX 75 buys the previous month actually for a good month. Even I didn't know that I'm capable of holding positions for that long. But then, if you analyze it from a bigger perspective, if you look at it from a bigger perspective, you can basically predict what is going to happen in the future more accurately, because basically I believe, and also this goes hand in hand with my time in trading actually, I believe that your bigger time frames, they're the ones that give you a much more accurate reading of where the market is heading. So yeah, man, for those long-term trading, I'd suggest you look into becoming a swing trader and becoming a positional trader. Remember, guys, holding longer, it pays you even more. So think about it. Think about it, guys. Moving on with the slides. Trading trend reversals. In a scenario when a price trend shifts from an upward to a downward direction or vice versa, it is called a trend reversal. Traders can seek to gain from this by attempting to get out of the positions before the shift manifests, or as early as possible if the movement has already begun. This is called trading trend reversals, which is also known as counter trend trading. Basically, counter trend trading is a technique that traders use in order to predict a trend reversal and subsequently trade against the current trend. Generally, a medium-term strategy, counter-trend trading, is a method of swing trading as it involves envisaging a potential reversal or a swing in the trend. Basically, what we mean by envisaging is basically forecast. Alright guys, so basically that is it for trends. You guys do stay tuned. Basically, after I've completed all the slides, that is where you guys will be taken to the practical side, where I'm gonna show you exactly how to apply all of these trends and also how to apply the next chapter that we wanna dive into, which is support and resistance. So without wasting time, let's get right into it. Support and resistance. Support and resistance levels are a natural outgrowth of the interaction of supply and demand in any market. Basically, what is support? Support is area on your chart with potential buying pressure. So as you can see guys on the chart illustrated over here, we can clearly see that we have a very strong support structure over here. Basically, it's a support structure because market is failing to push below, so it is supporting price. It is holding price upwards. So the minute price breaks below it, that's when our support structure will now turn into resistance. But then I'm gonna show you guys later on in the lesson. Support and resistance continued. Resistance is area on your chart with potential selling pressure. So basically, as you can see over here, similarly to what we had on the support illustration, same thing with the resistance illustration, we can clearly see that we have a very strong resistance structure over here. Basically, market, as you can see, it is failing to push above. So the minute it breaks above, this will now turn into our support, because it will then support in price, and then we'll be looking for buying opportunities. But however, for as long as price is still below our resistance, below our ceiling, we are still looking for selling opportunities. Simple, right? I know. Why support and resistance are areas on your chart? Because of these two groups of traders. Basically, the first one is traders with the fear of missing out. We call it FOMO. Basically, these are your traders who do not want to miss any opportunity in the market, so they have the fear of missing out. And then secondly, we have traders who want to get the best possible price, cheapo. Basically, these are your most patient traders. Basically, your traders who are looking for good entries in the market. Basically, these are your traders who are patient enough with the market. Remember guys, the most rewarded traders are the most patient traders. So when it comes to trading Forex, when it comes to trading the markets, your patience will be tested quite a lot. And you will also see that with the strategy that you guys are going to learn in this chapter, it requires a lot of patience. So if you do not have patience, then this is not for you, unfortunately. However, your patience will be tested quite a lot. You want to see that in this journey actually of you becoming a great trader, you want to learn that patience is everything. Actually, you want to learn that patience is a virtue. Good things do come to people who wait. In South Africa, I like to say danko. Now let me explain. Traders with the fear of missing out would enter their trades the moment the price comes close to support, and if there's enough buying pressure, the market would reverse at that location. On the other hand, there are traders who want to get the best possible price, so they place orders at the low of support, and if enough traders do it, the market will reverse near the lows of support. But here's the thing, you have no idea which group of traders will be in control, whether it's FOMO or cheapo traders. Thus, support and resistance are areas on your chart and not lines. Trading at support and resistance gives you a favorable risk to reward. The big mistake traders make is this, guys: entering trades when the price is far away from support and resistance. This requires a large stop loss and offers you a poor risk to reward. Below here is an example of what I'm talking about, guys. So as you can see here, we have our entry point. Quite clearly, this person is looking to sell. As you can see, this is the profit target. However, the profit target is the same as the stop loss. which does not make sense. Remember, you want to gain more and then lose less. So this is what we mean by the big mistake traders make is entering trades when the price is far away from support and resistance. Alright guys, but if you let price come to you, then you will have a tighter stop loss, and this improves your risk to reward. Same thing I just explained on the previous slide, guys. Basically now the mistake has been fixed. As you can see over here, that is not the entry point, that is not a profit target, that is the reward. And now compared to the risk, this makes more sense. You're looking to gain more and then lose less, right? So that's it, guys. For support and resistance, not really a lot. So basically what you needed to know, what you needed to learn, quite simple. About support and resistance, we buy at a support and we sell at a resistance. That's it. Simple, right? Let me make it more simpler for you guys. Right, but before we get to that, let us just get past this last slide actually. Levels and key chart levels. Basically, key levels are psychological price levels on a forex chart, where many traders base their technical analysis on. These traders are likely to place their bullish or bearish entries and exit points around these levels, and as a result, key levels tend to be crowded with a high trading volume. Furthermore, guys, these levels and key chart levels will be better explained on a practical side. So without wasting any time, guys, let's get right on to the practical side of things actually. Welcome back again, guys. This is the practical side. So now we've learned about trends, we've learned about our support and resistance, we've touched on a bit on chart levels and key chart levels. Now it's time to basically apply all that we've learned on the theory side actually. Now it's time to take it on the practical side. It's time to show you guys what I've been talking about, mentioning trends, mentioning support and resistance, mentioning levels as well. So yeah, guys, as you can see over here, I have the USD CAD instrument open. Basically, guys, before you even start analyzing and whatsoever, you just have to take a moment, just look at what price is giving you. Try to analyze it in your head before you basically start placing your trends, your zones, your lines, your levels, and all those tools, man. Just look at what the market is presenting to you at this point in time. So now, here's another thing that I also just wanna talk to you guys about really quickly. Actually, when it comes to time frames at FSGO, most of you guys will know that we like to start analyzing from bigger time frames, which include the weekly, daily, and so forth. Basically, in my years of trading, I've come to realize actually that what is more important is the type of trader that you are. Basically, we have four types of traders. We have our day traders, we have our swing traders, we have our scalp traders, and then we have our positional traders. I'm gonna explain all four of them. Basically, scalp trading is scalp traders is basically your traders who are looking to get in and get out of the market. Basically, you're looking to catch those volatile movements, quick in, quick out, go do whatever it is that you wanna do at that time. Day trading is basically involves holding positions for a day or two. Those are day traders. And then we have swing trading. Swing traders are traders who are looking to hold trades for more than a week or so. Basically, you're looking to hold the whole movement, you're looking to catch the whole movement, you're looking to ride the whole trend. But you guys will learn all about it. And then lastly, we have positional trading. Positional trading is people are looking to hold positions for more than a month or so. Which is it pays a lot actually, guys. So the longer you hold on to trade actually, the more you get to maximize on your profits as well. But without wasting time, guys, as a swing trader, I like to start analyzing from the daily or the 4 hours. But in this instance, I'm gonna start analyzing on the 4 hours time frame. So on the 4 hours time frame, I can basically see that we have a bullish trend over here. USD CAD gave us a bullish trend. Basically what we like to do is we like to clone it, give it its twin brother or twin sister I should say. Basically this helps us to spot those strong trends. Right, as you can see over here, we have spotted our bullish trend on the 4 hours time frame, and I can already see that the market has a very strong support structure over here, guys. Market does have a very strong support structure over here. Remember, we just learned about support and resistance, and currently I'm seeing that we have a very strong support structure over here. Remember, we buy at a support and then we sell at a resistance. So currently this is what I'm looking at on USD CAD. So let us dive in deeper to see what more can we do from this trading pair, from this trading instrument. I can see that on the 1 hour, basically the market is presenting me with some sort of another trend. We call this the trends in trends, guys. We call this the trends in trends. It is basically trends in trends because it is another trend inside an overall trend. So currently at this point in time, the market has presented us with a bearish trend inside a bullish trend. Currently we're broken outside our bearish trend. We know that after a breakout, we're expecting the market to complete the movement to where the triangle, to where the trend started actually, which is right over here, guys, which is right over there. So currently what I'm expecting market to at least come test this level that we have over there before giving us our long-term sales that we'll be looking for on USD CAD. Basically, the reason why I'm saying that I'll be looking for reversals at that point, we know that after a breakout retest, market is gonna give us pushes to either the downside or the upside. In this instance, the market gave us pushes towards the upside. As you can see, it has to come and test where this trend started, actually where this downtrend started. It needs to come test there. We know from that point on we're looking for what? We're looking for reversals. Hence why I'm saying we are looking for short-term buys on the USD CAD. We're looking to go long-term sales on the USD CAD. And that is how we basically use the trends strategies, guys. It's quite easy. The only thing that you do is you just follow the trend. You never trade against the trend. You follow the trend. Remember, we follow the market. We do not control or lead the market. We follow the market to predict future market movements using the past data. Alright, guys, so I'm gonna show you another example on another pair. Actually, basically, guys, I'm showing you all these examples on these pairs because I believe that these pairs, they respect setups a lot, guys. So over here, as you can see, we have gold open, but I'm just gonna remove drawings and start again. So basically, looking at gold from the daily time frame, I can see that gold has been in a bearish momentum. Actually, it was in a downtrend, beautiful downtrend actually. And then just to clone it over there, clone it, give it its twin brother or twin sister. Remember what I said previously, guys, this helps us to spot those strong trends. So currently this is what I have on gold. But now to see what more I can do with this data that I've collected, I need to dive in deeper to now look for my entry edges. So as I dive in deeper to 4 hours, guys, I can see that gold actually gave us some sort of a trend inside a trend again, guys. We had a bullish trend inside an overall bearish trend. Actually, we had a bullish trend inside an overall bearish trend. So currently we know we're already looking for sales. Breakout retest, we know looking for selling opportunities because basically the market broke outside our bullish trend. Furthermore, what we can also establish, we can actually see that we had a very strong we have actually a very strong resistance area over here, or resistance structure. Basically, remember what we learned on support and resistance. At a resistance, we're looking for selling opportunities because we are still below a ceiling, guys. We are still below a ceiling. So as you can see over here, I have spotted a very beautiful resistance structure over there actually. And basically, to look for my entry edges, I'm gonna look for the closest level actually. I can just put a level over there. Oh, by the way, guys, this is how we use levels actually to confirm furthermore our entries or what we are looking for. Basically, levels is I can place the horizontal line where I'm seeing a lot of market reversals, guys. So basically what I'm doing is I'm picking out those market reversals, and I'll explain to you after actually why I'm putting the horizontal lines where you see them actually. So just to quickly explain how the levels work actually. Basically this is a level because I'm seeing that market came a lot to test this level over here. Even in the past I can see that the market was testing this level a lot. Over here we have another level actually. Market broke below, then became a resistance, then market has been failing to push above, which made it a very significant level. Also we can see in the previous market came to test this level a lot. We can also see it came to test this level a lot. Same thing that happened over here, actually market came to test this level a lot. Basically that is how you can spot your levels, guys. So at this point in time, looking at gold, gold is still giving me furthermore selling opportunities. For as long as we're still below this level that you see over here, we're still looking for further selling opportunities. The reason why I'm saying for as long as we're still below this level is because this level currently it is acting as a resistance. It is currently acting as a resistance. Remember, guys, at a resistance we are looking for what? For selling opportunities, and at a support we're looking for what? We're looking for buying opportunities. But nonetheless, guys, thank you so much if you've made it this far in the course. Thank you very much. Do stay tuned for more powerful educational content moving on forward, guys. This episode, your mentor, signing out.